Welcome to the Standard Deviations podcast, presented by Orion Advisor Solutions and hosted by Dr. Daniel Crosby, Orion's Chief Behavioral Officer and New York Times best-selling author. Each week, Dr. Crosby interviews a fascinating new guest on a range of compelling topics, from literature to psychology to financial wellness. To learn more about Dr. Crosby's behavioral finance work at Orion, visit www.orion.com.
Hello and welcome to the Standard Deviations podcast. I'm your host, Dr. Daniel Crosby, and today I'm joined by Jackie Wilke, who is a VP and an advisory practices consultant at First Trust, where she works with advisors to get their businesses out of autopilot and into growth mode. Jackie, welcome to the show.
Hi, Dan. Thanks so much for having me. Excited to be here.
Jackie's coming to us from snowy Chicago. Jackie, are you a Cubs fan or a Sox fan?
You know, I'm not super into baseball, but if I had to pick one game to go to, it's Cubs all day, every day.
Okay,
Wrigley's so much better.
Okay, well, I'm a big Cardinals fan. We're going to do our best to overcome our differences and have a fruitful conversation today, despite the fact that we cheer for warring baseball teams. I think we can do it.
I think we can too. I believe in us.
Beautiful. So, Jackie, one of the things that I like to refer to myself as is a student of behavioral finance. You know, when you're talking about human psychology, I don't think it makes much sense to say you're an expert in something when there's so much change and so much variability. You refer to yourself as a student of success in your bio, and I really like that. And one of the things that I always look to do with my work and my research is to reduce complex phenomena to their core. So as a student of great advisory practices, I'm just curious, what are some of the consistent themes that you're seeing that run across them sort of universally?
You know, similarly to you, I believe that we should always be learning. And is there really ever expertise that doesn't evolve and change, because life is always evolving and changing? So yeah, I have kind of a unique role at First Trust where I get to study what successful advisors, teams, RAs, enterprises do all day, every day. And then I get to bring that idea to other individuals and teams, whether it's through coaching, consulting, speaking, or a blog that I actually write called Insights and Innovations, just because what's working should be shared. I don't believe that people in this industry are in competition with each other. There are so many clients out there to have, so much money to manage, so many people to help that no one's in competition. So why not share the ideas? Because they're going to look very different applied to each business and being delivered from different people. So, you know, I think there are a few key things that are changing in our industry that are directly related to changes that individuals, families, investors, and people in general are experiencing. And, you know, for our industry, especially for financial professionals that serve investors, one of the biggest things that's changed is the commoditization of things in our industry, right? Whether it's access to certain markets, investments, products, access to information, access to others, right? Thought leaders, communities, and also the rise of technology. There are some very sophisticated apps and platforms out there. So investors have a lot of options. And, you know, a lot of the work that I do is with women, next-gen investors, multi-generational families. And a lot of these next-gen investors have grown up in this environment, right? They might be folks that you want to attract. They could be your clients next-gen. So we have to be cognizant of the fact that they grew up in kind of a DIY environment. So what is it that they would value from a financial professional? How is it relevant to them? And are we clearly communicating that? Gosh, Cerulli Associates, I think the latest number I saw was like $8.4 trillion is going to be transferred generationally by 2045. So if we want to have longevity in our business, if advisors are future-focused, growth-oriented, high-performing, we have to think about what's going to be relevant to a new generation of investor. You know, and not everyone wants to work with a financial professional, and that's okay. Because not everyone is all things to all people. I'm not all things to all people. You're not all things to all people. So it's really getting clear on who are we trying to target? Who do we want more of? What do they care about? So that we can reverse engineer everything we do, everything we say, all of our experiences to align with it. And I mean, there's only so much that we can control. I think, if anything, the last few years have taught us that. So I find, you know, when I'm working with individuals and teams from the folks that I've studied, there's three things that we can really control. It's our mindset, our narrative, and our experiences. And I'd be curious your take on these three things coming from the areas that you study in behavior and finance. So mindset, as the financial professional, you get to decide how you show up every day. You get to decide where you place your energy. You get to decide how you're going to lead your team, lead your clients. I'm a big believer that our mindset is the foundation for everything that's happened in our world around us. I actually heard a quote that our mindset is a direct manifestation, or no, the world around us is a direct manifestation of our mindset and the things that we tell ourselves. And I was like, wow, that's very true. So mindset's something that the financial professional can always control. Then we have the narrative. So the narrative is everything you do, everything that you say, because what you focus on is what your clients will care about. That's what they'll tie your value to, right? So if all you're talking about is the performance of their portfolio and your client walked in caring about whether or not they're going to have enough income in retirement, well, now they care about the performance of their portfolio, right? So you get to control what you talk about, what you focus on, what your team talks about, what you talk about in your content marketing, so that you get to kind of have some influence over what others tie your value to. But then people forget what we say and forget what we do, right? So that's why the overall experience is so critical. And we talk about it a lot. I think it's one of those, buzzwords is the client experience. Well, I kind of think the experience is that Maya Angelou quote. People forget what you said, they'll forget what you did, but they'll never forget how you made them feel. And, you study behavior. Feelings are kind of important when it comes to managing investors, their money, their life. So the experience is everything else. So your narrative is important. We can control that, but people will often forget what exactly you talked about or said. So how did you make them feel? And I think in our business, especially, it's a human to human business. If someone wants to DIY, they can, and they can do it pretty successfully. If someone wants a hybrid solution, that exists for them. If someone wants to go the way of Reddit and Robinhood, hey, they can do that. So if they work with the financial professional, it's because they like having their person, the person that they trust, the person that puts life at the center of all that they're doing. You've got processes in place so that everything that they experience is consistent and it has continuity to it. I don't know. I think a lot of times our clients just want to feel the love. They just want to feel like, yeah, I'm important to my people and they've got my back and they're going to be important to the people around me. And, I talk a lot about the 3 Ps, process, planning, and people. And people, I think, is the biggest component, especially going forward, people being clients and prospects who we're designing this experience for, but then also people being the professional, the team, the actual people that clients and prospects interact with. I call it human capital. And, that's kind of what we're here to talk about today is if you're not putting that out there, you're missing a huge opportunity because there is ABC planning, XYZ wealth management, forwards, backward, there's so many brands out there now. So who cares about a brand? Well, it's usually the people that we care about, right? Not so much the name like on the door, but the people behind it. And for new generations of investors, they've grown up buying from influencers, buying from social media, or asking communities that they have access to, what do you recommend? What service? What product? They read reviews, right? I never go to a restaurant before I've looked up photos of the food. I've read the reviews and I've asked people if they've been there. So, when it comes to fighting for people's time and attention, it has to be very clear, relevant value of what you can do for them. And it's going to come from the people. That's the most powerful thing. So kind of a long-winded first answer.
No, I love it. I love this 3-part framework of mindset, narrative, and experience. I think mindset is powerful, but if, fairly intuitive, I think folks get that. The narrative piece, Stacey Havener appeared on my show. Time is really running together over the last few years. A while back, Stacey Havener appeared. It's one of the most popular episodes of all time. And she talked about constructing a powerful narrative. And I just feel like I learned so much from that episode. So hopefully folks will go check that out. The experiential piece is so powerful. And I loved your Maya Angelou quote. And I know this. I mean, humans are really sort of emotional machines who work backwards and put a reason around an emotion, right? We don't think first and then feel. We feel first and then sort of retrofit our thinking onto our feelings. Can you give any specific examples of advisors who have created a unique experiential piece for their clients? And what did that experience look like?
Sure. So I'll use one of the teams that we work with that's out east as an example. Their client experience, a lot of it has to do with engaging clients and prospects outside the money. They are social creatures. They like to have fun. So a big part of being one of their clients is things to do. So they, during the pandemic, went all in on virtual experiences, had a lot of things that people were invited to, could attend, everything from a virtual wine tasting, virtual cooking class, hearing from a motivational speaker. They also do these things in person. So they have a lot going on that people can be a part of, right? Where even if they aren't able to attend the speaker series or that event, they're still inviting their clients, right? They're in front of their clients all the time, whether it's market updates, things going on with the team, or the fun things that they're doing outside the money. They might be out of sight, but they're never out of mind for their clients. So they do a lot of the fun things, but then they also go one-to-one a lot. So I talk about there's always 3 channels of our communications and our experiences. It's either one-to-one, one-to-some, or one-to-many. So one-to-many example, that's their newsletter. So their newsletter goes out weekly with updates on the market, what the team's doing, and then usually a personal anecdote, favorite song they're listening to, favorite show they're watching, right? It's not meant for a specific end communication receiver. It's more general. Then we have your one-to-some. When we're communicating with an audience that has something in common. So what we talk about is amplified, the value's amplified because it's more relevant to them. Business owners, executives with equity compensation structures, multi-generational affluent families. Then your one-to-ones. Those are the things we do that go above and beyond for a specific client, specific prospect. So one of the things that they did during the pandemic that I absolutely loved, I don't know if this was the same case in Atlanta, but here in Chicago, everyone got a puppy during the pandemic.
Yes.
Everyone got a dog. So they found out who of their clients got a dog during the pandemic, and they sent them one of those like dog boxes that I guess you can get online for them. Congratulations on the new member of the family. Here are a couple of treats and toys. Thinking of you. Hope everything's well. So it's the experience that they're touching their clients around things that are every aspect of their life, their finances, their families, and the fun things.
Yeah. So I want to share a stat. I was just searching to find it. I pulled it up. I wanted to share a stat from Accenture that blew my mind. It probably will not blow your mind doing what you do and seeing it from your vantage point. But this one is an Accenture study of what clients were looking for in an advisor. And here's the top 3 responses. 91% said someone who gets me. 71% said someone with whom I share values. And 70% said someone who meets with me socially. That was 1, 2, 3. Someone who understands me, someone who shares my values, and someone to hang out with. And like we spend all of our time wringing our hands about active versus passive and, high conviction versus low conviction. And, what's the information ratio and all these things, all these sort of technical things that just no one cares about. And when I think about, places that create fantastic experiences, I think of something like the Ritz-Carlton. And when we were moving to Atlanta, we would come here and go home shopping. And, we probably came 5 or 6 times. And we would stay at different hotels. But one time we stayed at the Ritz-Carlton because there was a deal on, and they had peach jelly beans. And my kids lost their minds, right? Because they had peach jelly beans. And so from then on, we had to stay at the Ritz. Like, how much did the peach jelly beans cost, right? But the kids were so excited because we were moving to the peach state and they want to stay at the hotel with the peach jelly beans. A dog box does not cost much, right? Like with a little, whatever, some little dog treats and whatever. It doesn't cost much. It doesn't have to be expensive or big. It's just about being thoughtful and tuned in to what people are looking for. So keep those 3 things in mind. You want someone who gets you, someone who shares common values and first principles with you, and someone to hang out with. Like lose the other stuff.
Well, and it kind of comes full circle, right? From the behavior side of things and what these advisors are doing to engage clients and prospects where clients feel the love, right? Mm-hmm. They're feeling like they're being thought of. And when it's unexpected too, when it comes out of the blue, it's that much more powerful. And people are funny, right? Humans, you know this, like people are funny. And for our individuals and teams that work with very affluent individuals and their families, it's the smallest things that they lose their mind over. Like one of our teams in Ohio, they do pies at Thanksgiving. And we always joke, they have a family that has, now with the growth in the market, it's probably upwards of 70 million with them. And if they forgot to send a pie to this family at Thanksgiving, clients would be out. They'd walk, right? Like people are funny, but it is the smallest things. And it kind of comes back to like, it's that interaction with the other humans that you feel the love, you feel important, and you feel tied to them. I love those stats. I have not heard those.
I'll share those with you after, but yeah, do the work to help your clients feel the love. I love it. So second question is one I have to admit I'm very proud of. So your work sits at the intersection of a number of industry buzzwords, right? You're talking about family wealth, next gen, women in wealth, wealth transfer. And I'm not doubting the power of any of these things. I'm bought in. I know they're all important, but I feel like they become so pervasive and so ubiquitous in their focus that we almost play a game of telephone where we pass around misinformation about some of these things. And I feel like sometimes a mythos gets built around some of these buzzwords that isn't accurate or isn't appropriate. So now that I've got an expert on the line, let's do some myth busting around the topic. Where do you think we get it wrong as an industry around some of these sort of much discussed buzzwords?
Yeah. So I really liked this question too. And let's say we focus on the three target markets that I really focus on: women investors, new generations of investors, clients, families. So I want to pick two things. The first one is, I think sometimes we overgeneralize and assume things about these demographics because women are not a niche market, right? They're gender and they're half the population. New generations of investors, well, that's defined differently depending on an advisor's business from another advisor's business. So I think we have to be careful that we don't overassume and make assumptions that sometimes backfire. I'm not kidding. I had this advisor who won an account from a previous advisor. And the reason that the clients left and went to this new advisor that I was working with is simply because the advisor wasn't putting one of the spouse's names on the communication, which seems just crazy. Like you would forget a spouse's name on a communication, but we know better than that. However, our behaviors and our habits sometimes don't reflect what we know. So how do we actually take this information, put it into practice without over assuming? So that if you are sitting down across from a 35-year-old woman investor, you're not telling her how she should be thinking and feeling. You're asking the questions. What are your habits? What are your values? What are your priorities or preferences? What keeps you up at night? And then reverse engineering everything to tailor to that person, because 35-year-old to 35-year-old are very different people, right? So I think one of the things you have to be careful about is overgeneralizing and overassuming based on the information and data we have. It's helpful, but then how does it actually apply in practice to each individual household and advisor's practice? The other one is next gen. Play along with me here. So when I say next gen, what generation comes to mind?
I'm going to say 18 to 35.
We have a generation in mind, right? Oftentimes the answer I get when I ask that question is millennials, right? Yeah. Okay. So next gen millennials, I think we tied those two a little too close. So it is important that we diversify generationally our top clients. There is so much money that is being transferred, money that is being built, inherited, passed down. And we have to have a diversification because, one, if we want future growth in our business, we have to have younger investors. And we also need to fortify what we've built. If you're an advisor that's in succession and all you have are 80-year-old clients in your business, how is that going to be valued, right? So diversification is important. But when it comes to next gen, there are really two next gens. there's that younger investor that we need, but there's also our clients' next gens. And many financial professionals in our industry have older clients. So that 70 or 80-year-old client is 50s, 60s. They're next gen. They are the next decision makers on the assets of your existing clients. So the reason that generational wealth transfers have such a high rate of asset attrition is because we didn't connect with those individuals ahead of the wealth transfer. I mean, think about it. Just hypothetically, let's say your parents are older, they pass away, you're 6 years old when you receive this $20 million inheritance, and then their old advisor calls you, their advisor. What do you really hear? Hey, right. I care about you now that you have the money. Well, I'm 6 years old. I probably have an advisor. I'm already working with someone else. And also, like, thanks a lot. Like, that's not the way to fortify your practice. So there's a process that I coach teams on. It's called the family phone call. And it's very, very simple. It's from one of our teams in California. It's simply to help you bridge that gap, get a warm, proactive introduction. The call itself is only 10 minutes. You're only introducing yourself. You're not talking about money. It's not a family conversation. But just having that touch point alone ahead of a wealth transfer drastically increases your chances of retaining the wealth. It also gives you some insight into the family, because there could be members of that family that are prospects now. They already have wealth, or there's folks that you don't want to work with. Not everyone in that family tree is going to be a good fit for your business. So if we know that now, well, then asset attrition was a choice. We planned for it, right? So we grew over here. We nurtured relationships there. We got 20 more referrals from this client. That's okay. When that wealth is transferred, we know it's going to go. So I guess that's kind of the myth busting, is don't over assume with next gen and women based on what you've read. Go to the individual, actually go human to human with them. And then there's two next gens. Keep that in mind. For your business, think about your next gens, oldest clients, younger clients. Maybe we can go horizontally in the family tree, go up the family tree, but really focusing on who is next.
Yeah, I think this is something that's really hard for people to do. And like, let's throw it back to that last stat. The number one thing that people are looking for from an advisor, 91%, someone who gets me. Now, there are things that are true about women broadly that are pertinent to a financial advisor's life. Like, in general, women tend to outlive men. And so there's some longevity risk in general with women. That means you have to, approach their wealth with some different assumptions. Like, that's largely true of women in general, but not necessarily true of any woman in specific. And I think sometimes we do overassume, we do overgeneralize, and that we as an industry have developed sort of a patronizing one-size-fits-all to approach to working with women. Apologies. I do think I've told this story on the podcast before, but it was a big one for me. I took my daughter to see the Braves play when the Braves got their new stadium. And so we're like first time in the stadium and we're walking around and I see a store that's called Braves Girls or something, Braves Country Girls. And I take her in there. And there's all these like pink jerseys and sequin stuff and shiny stickers and stuff. And I'm like, hey, you can get whatever you want. I'll get you whatever you want. I want you to have something. And she looks around for a minute and she goes, I don't want anything in here. I want what the players wear. And I'm like, oh yeah. Like I took you to this sort of highly stereotypical, sort of over assumed thing. And she wanted something different. And I just sort of assumed. And so I analogize that to the way the wealth management industry has sometimes approached women. We've sort of glittered things up and made some big assumptions, but we haven't always taken the time to listen and meet that person where they're at and learn about them and sort of question those overarching assumptions.
Yeah. And like, she could be this was one of our advisors. I'll never forget this story. He was talking to one of his clients' daughters. She had her PhD from Harvard in psychology. Like, she is off the charts smart. And the reason she wanted a financial professional wasn't because she didn't get it or couldn't understand it if she wanted to. She didn't have the time. And frankly, she didn't have the desire.
Yeah.
She didn't want to do it. Right. So if he had approached her with a very simple, here's finance one, like she would have been totally turned off by it. Instead, he switched from, rather than talking to her, starting with just simple questions. Tell me about your experience with money. The questions that you teach advisors to ask all the time that give you a look deeper than money of what's actually going on with our clients, habits, values, priorities, preferences. And I always come back to, what keeps you up at night? What was money like growing up? Because that's also probably going to help you navigate working with that client, and maybe telltale if there'll be that client that calls you every time there's volatility in the market.
Right.
So I don't know, asking the questions versus talking to the person, just like you would with any investor.
Sure. So I first became aware of your work because you do a great job of posting informational videos on LinkedIn. And I've seen you focus recently in your videos on sort of emphasizing human capital, the power of a human brand. And we know this, right? We know that people want to do business with people. We know that authenticity matters. But while we're questioning sacred cows here, this whole concept of saying, let me go brand myself and be authentic sort of seems deeply inauthentic to me. Like, it's almost like if you have to think so much about it or create a brand, you've lost the plot from the outset. So how do you think about sort of resolving this catch-22 of being intentional, but simultaneously being authentic?
Well, Dan, let me tell you how authentic I am. Like, I say that sarcastically because, the listeners can't see my face right now, but first, I wouldn't assume that everyone knows how important a human brand is and how important it is to put your people front and center in what you're doing, whether it is experiences, marketing, you name it. A lot of people, I don't think, quite get how important that is in this day and age. But when it comes to this authenticity, like, it's kind of a lot of pressure. And I think authenticity is something that's felt. If someone has to tell you how authentic their brand is, they miss the mark, right? Authenticity is how you leave something feeling about you, and then whether or not that's backed up by actually working with you. Like, speaking of Stacy, she's an absolutely fantastic person. I loved your podcast with her, so I hope people go listen to it. We were joking about this the other day on LinkedIn, that sometimes people have this amazing brand presence. You see them everywhere, but then you actually work with them and it's not the same person, right? That's an authenticity disconnect. We were joking that it's like getting something from Amazon. It's like what I ordered versus what I got.
Yeah.
And they're very, very different things. So that's authenticity, is the way that you show up when people engage with you and want to start to do business with you. Is that actually what they get consistently? And is there continuity in it? Like, I would say I don't really have a great personal brand. There are people who have fantastic personal brands. They are airtight. They are clear. They're concise. Mine's always evolving. But my biggest thing is just putting myself out there. And the information that I'm delivering, is it going to be relevant to my target audience? Yeah. So I believe that what I'm sharing is going to be helpful to someone. So I'm going to keep putting it out there, right? And ultimately, your audience decides. They decide, yeah, I like this. I want to keep working with this person, or I want to start working with this person, or they decide, not for me. And, you talk to a lot of marketers out there. If you really want to attract an audience, you're going to have to repel a lot of people along the way.
Yeah, I think that's a great point. I also like that you emphasized how deeply demotivational it is when there is a delta between someone's brand and how they are in real life, right? I mean, we feel duped, we feel lied to. And I think it needs to be emphasized that there's a big enough world and a broad enough spectrum of people that there really is, just like in marriage and dating, there's really someone for everyone. I think about my dad, who's a very successful advisor, who is maybe listening to the show, but my dad is,
Hey, Dad.
Hey, Dad. My dad is deeply introverted. My dad doesn't own a cell phone, right? I mean, like, my dad doesn't tick the boxes for what you think of when you think of like a very successful financial advisor. He's not especially tech savvy, not especially outgoing, but he's very successful because he finds clients that are like him. He finds clients who want a sort of factual, no frills, no nonsense advisor who's going to shoot them straight and steer them towards their financial goals. Like if he tried to be something else, he couldn't keep it up long, and then people would meet him and see that he didn't have a cell phone, and they'd be scared off. So be who you are, because you can turn someone off pretty dramatically if there's a delta between who you appear to be online and who you actually are. And
kind of to echo that, like trying to show up and be someone that isn't you, frankly, sounds exhausting.
Yes.
And you've got a lot of other things to focus on that shouldn't be where you're spending your time and your resources. And I think to your point with your dad, like not everyone has to show up the same way. Not everyone has to show up on the same places. Like wherever your target audience is, go be where they are, go show up where they are. And you don't have to show up the same way on every platform, like LinkedIn versus Instagram versus Facebook. You're probably going to be talking about different things or sharing them in a different way because things are received differently on different channels. So I think that's a great point. One of our teams, they define their ideal client as PLUs, people like us.
Yeah, that's right. So let's stick with this concept of highlighting human capital for a minute. What is it? Like help us get our arms around it. And then what are the benefits for individuals and teams that choose to run with this highlighting human capital?
Yeah, so humans are what draw us to brands these days. They're often who we buy products, services, who we find things through. And we see that shift broadly. Ad dollars, marketing dollars, they're not going to billboards anymore. They're going to people because people buy from people, just like you said. And, I was thinking about it. It's kind of what brought us here. We're not having this conversation because you work at Orion and I work at First Trust. It's because we aligned with what we believe, what we talk about on LinkedIn, right? Mm-hmm. It's the people who connected with the people. So the same goes for financial professionals, the ones that are putting themselves out there, again, wherever their target audience exists, however they're comfortable, they're building stronger, more differentiated brands. They're having deeper client engagement, better relationships with their clients, and they're seeing more referrals come from it. So highlighting your human capital is just getting your people out there. I wrote about this in the blog, and it's still one of the blog pieces that I got the most feedback from is keep it simple. Just start out by doing a team spotlight series. Every single week, highlight a different member of your team so that your audience can get to know them, whether it's clients, prospects, maybe you share it in the newsletter and on LinkedIn, but it's a photo or a video, maybe a quick Q&A, getting to know them as both a professional and as a person. What are their hobbies? What are their interests? As well as what they do within that client service experience. So I think that this is going to be something that we see continue. And it goes back to those three things of how people are selecting financial professionals. It comes back to the people, right? The name, the brand is tied to the people. So if you put the people first, your brand gets out there more. If you think about it, like one of our teams in Seattle, they're in RIA. And during the pandemic, they have gone all in on video. I'm a big believer in video. And it's not videos of people that clients don't know. It's not actors, it's the advisors. And they share stories. They share stories about what they're doing with the team. They talk about market updates. They talk about stories of how they're helping clients with different things to highlight specific services or focuses that they have for that month or that quarter. And it's incredible how they have seen their business change. Clients feel tighter to like more closely tied to them as their advisors. Trust is deeper. They're feeling the love because they're seeing their advisors all the time. But then also from a marketing and growth perspective, clients or prospects are calling them. Demand is coming back to them because people see the videos time after time after time, right? That's why consistency is important. The content was valuable and relevant to them, and they feel comfortable because they know who they're calling. If they have a 20-minute Ask Anything session intro with these advisors, they saw them, they heard them, they know who they're sitting down with or who they're talking to over the phone or over Zoom.
So one of the things that I've loved about the Zoom era, there's plenty not to like, but one of the things that I've liked the most is just getting glimpses into people's everyday. Like I was on a call this morning with a group of advisors, and one of them had a bunch of Wes Anderson posters behind them. And I'm a big Wes Anderson fan. And so we could talk about film. And I was with one of our PR folks a few weeks back, and he had all these like mini painted like figurines called Warhammer of like just like little dragons and stuff. I was like, oh, that's so cool. You know, you just got these little quirky glimpses into people's lives. And we should do more of that, right? We should do more of that even when we're not peering into each other's homes through Zoom and we're back together. We should continue to give each other glimpses into our lives and our preferences and our interests, because I think it really binds people together in a big way.
Yeah. Well, I know you had Kristen Shea on the podcast a few episodes back talking about principles of influence, right? Robert Cialdini's 7 principles. And one of them is unity. Unity is so powerful, relating people human to human on the things that we are interested, shared experiences, things that we're excited about, looking forward to. And it just opens up a dialogue or opens up an opportunity for a relationship to become that much stronger.
So I want to pivot a bit and talk about niches. There are, depending on how you define financial advisor, there's somewhere between 250,000 and 500,000 financial advisors in the U.S. alone. And I mean, let's face it, largely they're trying to meet the same ends. They're diversifying client assets. They're behavioral coaches. They're serving a handful of sort of similar offerings. What hope does an advisor have to stand out? How are you seeing advisors effectively stand out when there's 500,000 people just like them after the same doctors, lawyers, entrepreneurs? What are you seeing that works?
There's a lot of things that work. I'm a big believer that if you want to try something, it works if you work it. Right? It's like diets. Diets are successful if you actually follow the diet, right? So if you're going to try something, work it. And if it works, keep doing it. Go to the gym a couple of times, see results, then we stop going to the gym. New Year, still kind of on the resolution train here. So I think that some of the things that advisors can do is get very clear on who you want to be all things to, your sum. Who is your audience that has something in common that you want to truly be so obviously the right fit for them that all your content, how you show up, where you show up, why you show up is going to draw them in and get you more access to them and more attention to that group. And I also think, one of the best ways to grow is through your existing clients. Maybe it is that multi-generational family tree. Maybe it's their personal professional networks, because your existing clients, they're already sold, right? So become famous with your fans. Play to a sold out show rather than trying to go and find cold leads. And if you are in that spot where you're building your base, you are in the beginning stages of your book, maybe you go and you find someone to partner with, an advisor that might be in succession mode, partnering with them, or just putting yourself out there. And I think that's kind of how it comes back to putting yourself out there as a human, because you are the most unique thing about your business. Services, access to the market, so much is being commoditized. Unless you have a clone out there, you are one of the most unique things to your business. So putting yourself out there, growing through your existing clients, being all things to a very defined audience, that's how I'm seeing a lot of individuals and teams grow.
Okay, I think we just found the title of this podcast. I think the title of this podcast is "You Are the Most Unique Thing About Your Business," right? Because technology is standardized, product is standardized. You are the difference maker. And as we know from the stats I cited earlier that I'll keep revisiting, not only are you the difference, you're what matters, right? Like you're what people are buying. So you are the thing that's unique about your business. You've said this before in this podcast. I think it bears reemphasizing. Having a niche, emphasizing your human capital, all of these things are going to repel at least as many people as they attract, and they're going to cause you to say no to at least as many opportunities as you say yes to. I will never forget, I was moderating a panel at a big conference for top advisors many years ago, and one of the advisors that so impressed me on this panel, I'm going to make up the numbers. I can't remember the numbers, but they were in the DC area. They worked with people who had exited a defense contracting business at the size of like $25 to $100 million. But they said, if someone sells a defense contracting business for $15 million, they will not take them on. If someone sells a tech, a tech business for $200 million, they will not take them on. I mean, they had these really narrow parameters within which they were the absolute best in the world. And they said no to even very attractive opportunities that came their way that were outside of that wheelhouse, and they had been enormously successful. So I think that we have to remember that principle. You are the thing that's unique about your business, and your uniqueness is going to really knit some people to you, and it's going to turn some people off, and that's as it should be.
Yeah, I mean, and it kind of goes back to the other principle of scarcity. People like exclusivity. People want to be a part of the club. Yeah. So when you have those strict parameters, you have to also be very intentional about sticking to them. I've seen teams that have taken one person outside of the parameters, two people outside the parameters, and the next thing you know, they're all things to all people again. So I agree, that's the way to grow, but we have to stick to it also, which can sometimes be hard, but ultimately you're building your ideal practice in that way. And the one thing too, you're the most unique thing about your brand. Same with your team. That's why we also, if you do have a team, highlight everyone, because it also doesn't put you at the risk of kind of that maverick talent where if you left, clients are like, well, I don't know who I'm working with now. Of course, you know the whole team.
Yeah. So as we begin to wrap up now, I want to ask a little bit about your company, because it's a company that has long fascinated me. I've often thought I would be a really bad sort of venture capitalist, a very bad sort of early term investor, because First Trust, your employer, is sort of bucking every trend. I mean, I think First Trust was founded in the early 90s. And this is a time since the early 90s, things have been trending passive, things have been trending inexpensive. And First Trust, at least in many of their products, bucks both of these trends, but has been enormously successful. So what is it that has allowed First Trust to build a successful business in the world of asset management at a time when many sort of broad industry trends are going against you at about a 3-to-1 clip in the case of active versus passive?
So a lot of the things that we've talked about today are how we apply them to our business at First Trust. So, low cost passive income funds, great solution for certain people, right? There are options out there so that everyone can find the best solution for them. For us, it comes down to, what we believe, how we add value, and for whom it's relevant, right? Just like all these things. So, for us, you'll never see a First Trust commercial. We don't have our name on any stadiums. We put all of our time and our resources into building things that help the financial professional and the firms that serve them. So we don't market to retail investors. We market to advisors, decision makers, firms, and we build out those resources to help them with all aspects of their business, right? If our value proposition or our goal is to be your first phone call at First Trust and you're a financial professional, you're the firm, we want to help you with many aspects of your business. So we have some of the best economists in the space for economic insight and commentary. For our products and investment solutions, we have a ton of different options based on what you need. We also have some of the best in-class managers to build those products. And then the team that I'm a part of, helping with business development, practice management, working on your business so that we truly have a robust offering of resources for advisors that want to come alongside and do business with us.
Yeah. Again, learning, practicing what you preach and having it bear some significant fruit. Very cool. Well, Jackie, this has been a fantastic lesson in how to build a successful business, how to lead with your most authentic self. If people want to get some of this wisdom, if people want to watch your videos, read your blog, where can we find you and follow your work?
Yeah. So first, thank you. Time has absolutely flown by. I've had a lot of fun. You can obviously tell I love talking about this stuff because it works, right? When it's put into practice, it's incredible the changes that I've seen for both advisors' lives and for their businesses' lives and ultimately for their clients' lives. So LinkedIn is one of the best places to find me. LinkedIn, Jackie Wilke, and then through First Trust. check out our website. We have resources on there. If you don't know your first trust wholesaler, reach out to me on LinkedIn. I'll get you connected. They can get you signed up for the blog. It is one that we sign you up for. You can't register for it because it's for financial professionals only. And just let us know how we can help. That's really what we're here to do.
All right, everyone. Follow Jackie on LinkedIn. You're going to get lots of great video content that's going to help you build your business. Thank you again, Jackie. It's been wonderful. And we'll talk to you soon.
Thanks, Dan.
Thanks for tuning in to Standard Deviations. If you can't wait till next week for more behavioral finance insights, visit www.orion.com. All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by Orion and its affiliates, subsidiaries, and employees. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information the participants consider reliable.